Cost volume profit analysis. Cost volume profit or CVP analysis studies the relationship among variable costs, fixed costs, sales volume, sales price, and sales mix, and their effect on profit. We use the contribution margin approach when it comes to CVP analysis. What do we mean by the contribution margin approach? This is how our income statement would look like. From sales, we would deduct variable cost. Instead of cost of goods sold, we only select the variable cost. Those that move together with the volume of sales. This would lead us to what we call the contribution margin. Then we deduct the fixed cost. We will arrive at the operating profit. Saka tayo makakarating ng operating profit. In short, we classify costs on the basis of behavior. We classify costs on the basis of behavior instead of based on function. Malinaw? Next. Let us check kung naintindihan niya yung meaning ng variable and fixed expenses. How does total variable cost move? Total fixed cost move. Pag per unit, paano yung movement nila? 1 minute for this question. Go. Enter now. Enter your answers, everyone. Enter your answers, everyone. Okay, what's the correct answer here? A decrease in fixed admin expenses per unit will not impact the contribution margin per unit. Letter boy. Bakit? Kasi ang fixed cost ay dinededuct after makuha ang contribution margin. Remember, fixed costs are deducted after the contribution margin has been calculated, not before. The correct answer here is letter boy. It has no effect on the contribution margin per unit. I'll give you 30 seconds for this one. The difference between the sales price and total variable cost is go. Enter now? Okay, enter now. Kakasabi ko lang, no? The difference between sales and variable cost, enter now, is called the contribution margin, letter C. Now, majority of the concerns in CVP analysis, at least in the exam questions, are pertaining to the break-even and target profit analysis. Pertaining sa break-even and target profit analysis, yung mga issues na meron tayo. Halinaw ba? Okay. So, imagine the x-axis is the unit sold. And wag niyong munang isipin ng ABC. Variable cost is driven by the number of units sold and produced. Okay? So, when the number of units sold increases, naturally, your revenue is price times the units sold. The blue line, your revenue would go up. No units sold, zero revenue. You have a unit sold, that number of units multiplied by the selling price. This blue line represents your sales revenue. As for your cost, there is a fixed portion of the cost. We call it the fixed cost, where the orange line would meet the y-axis is what you call the total fixed cost. Ito yung total fixed cost. When you produce nothing, you only have the fixed cost. But when you produce and sell something, production and sales so far are just the same. Dito sa ating discussion, yung production tsaka sales, same lang. When you produce and sell one unit, you will now incur variable cost. More units sold, higher variable cost. Initially, the total cost would be higher than the total revenue. However, there will come a point where the revenues would exceed the cost and you will earn a profit. The point where the revenues are just enough to recover all costs is what we call the break-even point. Ang tawag natin dito ay break-even point. We may express the break-even point in terms of the number of units sold or in terms of how much sales revenue in order to break even. Okay? The vertical distance between the cost line and the revenue line, the vertical distance, represents your profit or loss. To the left of the break-even point, you have the loss area. Okay? The difference between this and this line is the loss. Negative yan, no? And then to the right of the break-even point, you would see the profit area. The difference, say, between this and this, the vertical distance represents your profit. Paano kung gusto nyong i-target yung particular profit? Pwede nyong i-calculate yung target profit sales. Just like the break-even sales, the target profit sales can be expressed in units sold. It can be expressed in units sold. Or it can be expressed in dollars or pesos. Okay? Ayan. So, let's do mathematics with this. Okay. How do you arrive at operating profit? How do you arrive at operating profit? Sales revenue minus total variable cost, contribution margin yan, minus total fixed cost is your operating profit. Again, sales revenue minus total variable cost. Minus total contribution margin yan, no? This too is your total contribution margin. When you deduct total fixed cost, you would have operating profit. We may simplify revenues minus total variable cost as total contribution margin minus total fixed cost. It will give you your operating profit. Paano natin marating? Paano natin marating yung ating operating profit? Kunin nyo yung revenues nyo minus the variable cost minus fixed cost. Operating profit yon. Yung total contribution margin, it can be arrived at by deducting revenues, variable cost from the revenues. Total CM minus total fixed cost, therefore, is also equal to operating profit. Now, here's the point. If I'm going to transfer fixed cost to the other side of the equation, it will become plus. So you have here total contribution margin is operating profit plus total fixed cost. We may express the total contribution margin in different ways. Paano ba natin makuha ang total contribution margin? Siyempre, sales minus variable cost. Given na yun, no? Sales minus variable cost is contribution margin. It's a given already. But how else? Paano pa natin makuha yung total contribution margin? Pwede niyong gawin, kunin niyo muna yung unit CM. Price minus unit variable cost is your unit CM. Price minus unit variable cost is your unit CM, UCM. Okay? Just multiply it by the number of units sold. It will give you the total contribution margin. So how can I express TCM? Number of sales units times the unit CM. This is also equal to total CM. Sales units times UCM. This is equal to operating profit plus total fixed cost lifted here. Okay? Now, if I'm going to transfer UCM to the right side of the equation, you can arrive at the sales units is equal to operating profit plus total fixed costs over UCM. If you are targeting a profit, if you are targeting a certain operating profit, to arrive at the number of sales units needed, what you need to do is to add fixed costs to that operating profit and divide it by the UCM. This is your target profit point in sales units. So your target profit point nyo in sales units is equal to total fixed cost added to operating profit divided by the UCM. Kung meron kayong certain profit na gustong i-target, para makuha nyo yung sales units na kakailanganin para marating yon, target profit point in sales units is equal to operating profit plus total fixed cost divided by UCM. Okay? Now, kapag wala kang tina-target na profit, if you are not targeting profit, you just want to break even. Just remove the OP, your operating profit, because you just want to know the break-even point. So the break-even point in sales units, this is equal to total fixed cost divided by UCM. Okay ba? Total fixed cost divided by UCM. Okay, game? Everyone now, game tayo? Is there any other way to arrive at the total contribution margin? Wala talaga kayong mga tanong, no? Okay, you can question anytime. You can ask questions anytime. Wala pa bang, meron pa bang ibang way para makuha ang total contribution margin? Meron. Yung revenue, i-multiply mo sa contribution margin ratio. Determine what the revenues are. Multiply it by the percentage called the CMR. That's the percentage of sales that goes to contribution margin. Multiply the sales by the contribution margin ratio, yung percentage ng sales na napupunta sa CM. That's also going to give you total CM. Another way of putting total CM is by multiplying the revenues by the contribution margin ratio. This is the percentage of sales that goes to contribution margin. And this is also equal to this operating profit plus total fixed costs. So if I'm going to transfer CMR to the right side of the equation, magiging division na naman to. So this would give us the formula for the target profit point in terms of sales revenue. Okay? In terms of sales revenue. Total profit in sales, sorry, target profit. Target profit point in sales revenue. You add your fixed costs to the operating profit that you wish to target, divide it by the CMR. It will give you the target profit point in sales revenue. Target profit point in sales revenue. Kung gusto niyo naman makuha lang yung pang break even, just remove the operating profit target. Break even point in sales revenue is equal to the total fixed cost divided by the CMR. This is equal to the total fixed cost divided by the CMR. Break even point in sales revenue is equal to total fixed cost over CMR. Do you have any questions so far sa mga formulas na ito? Meron ba kayong mga tanong sa mga formulas na ito? Everyone. Okay, thank you. Sige. 2 questions bago tayo lumipat sa activity. 2 questions muna. The break-even point in units increases when the cost per unit blank. The break-even point in units increases when the cost per unit blank. 40 seconds. Go. Game. Enter. The break-even point in units increases when the cost per unit blank. Enter. Tataas yung break-even point in sales units natin kapag tumaas yung total fixed cost o kaya bumaba yung unit CM. Tama ba? Your UCM will go down if your price goes down or your variable cost goes up. Regardless of the behavior, variable man or fixed, when the cost per unit goes up or the price goes down or any combination of the two, okay, you will experience an increase in the break-even point in units. Kung hirap kayong mag-isip in actual business case, pwede niyong isipin naman yung mathematics behind. Dito sa choices, only letter dog is possible to increase the break-even point for sure. When the cost per unit increases and the sales price decreases o kaya remains unchanged, at least tumaas na yung cost per unit, you will need to sell more. Kailangan mo magbenta ng mas marami para mabawi yung gastusin mo. The correct answer is letter dog. Next. Isang question nga dito. Isang question. We'll give you 1 minute. Go. Enter now. Enter now. What's the answer? Enter now. A financial manager at BPO Manufacturing Corporation is conducting sensitivity analysis to determine the relationships between cost, price, and profits for product 575. Manager's goal is to reduce the break-even point for product 575. Fixed costs are $250,000. Unit selling price 20. Unit variable cost is 16. What are the break-even point sales in units if the variable costs are decreased by $2 per unit? Okay? Break-even point in units. This is equal to the total fixed cost divided by the UCM. Tama? Okay, 250,000 daw yung fixed cost. Tapos, 16 UCM, no? 20 minus 14 na lang. 14 na lang to. Okay na? So the break-even point is 41,667 units. Okay, very good, everyone. Ano ba to si Albert? Sabihan nyo kasi sila, Sir Albert, no? Huwag makulit, no? During class hours. Okay. Kanina pa siya. Anyway, game tayo? Sige. So what you're going to do next is to answer the 3 exercises for working capital management. Ibibigay ko yung continuation ng lecture na to in asynchronous form. Sa kabilang section na naman ako mag-synchronous mamaya. Okay ba? Sige. For the remainder of your time, please dedicate it to answering the working capital management exercises. They are already posted in your Section B folder. No? Section B folder. Tapos na tayo sa Section B, ha? Last na yun sa Section B. Section C na yung topic na to. Okay?